Yesterday was an absolute bloodbath in the markets. It was an absolute sea of red, as you can see behind me here. This is a heat map of the S&P 500, and there is literally no green to be seen at all. Every single sector fell, and not by a small amount either. Tech companies in particular found themselves getting absolutely hammered, with Amazon falling by 7%, Tesla falling by 4%, Google, Microsoft, and Apple all down by more than 5%, and Facebook or Meta losing 9% of its value in a single day. Of course, that isn't the whole story. Financials were down, healthcare was down, industrials were down, real estate was down, energy was down, consumer defensives were down as well. It was then the exact same story in the crypto markets too, with Bitcoin falling by 9%, with Ethereum down by about 7%, and altcoins down by more than 10% on average for the day. In short, it was an awful time to be invested in risk-on assets, with over $1.5 trillion worth of American equities lost in one day. What exactly happened though, and why did it all turn around so instantly? Because prior to this, the last week or so had actually been rather bullish for the markets, and is there more of this to come? All of that will of course be answered today. So yesterday we got the US's CPI Consumer Price Index report for the last month, which gives us a good basic idea of what inflation is like in the US. And in short, it wasn't good, but the market actually was expecting it to be rather positive. Last month, of course, we got the report that inflation was 0% month over month, which was amazing news, except it really wasn't. The headline figure was good, yes, but only because gas prices fell a bunch and dragged the index down. Inflation for food, shelter, services, and basically just everything else in the economy was actually still rather poor. Now, the market last month kind of just ignored that idea. It was the first good month-over-month inflation result of 2022 on the whole, and so investors took it and they ran with it. There was this narrative being pushed all over the place, particularly here on YouTube, that inflation is over. It got very popular and was published by loads of different pundits. This month, though, we've basically seen that idea be absolutely destroyed, and that's the massive overarching problem here. Investors expected to see inflation fall in all areas, not just in gasoline prices, but that simply didn't happen. But what was the actual data? Well, you can see it behind me here, and I'll link it in the description for anyone who wants to dive through it. But what actually was the data? Well, you can see it behind me here, and of course, I'll link it down below in the description for anyone who wants to comb on through it. But in essence, the headlines are that last month alone, food prices in the US rose by 0.08%, 0.7% at home, and 0.9% away from home, and that's very bad. Food prices are incredibly important to people's finances for obvious reasons. Everyone has to eat, and so it makes up a massive amount of people's everyday expenditure. And when people are spending more money on the same food that they're buying every single week, that means less money for discretionary spending, and it means trouble for businesses and their performances in the future. We also saw commodity prices rise by 0.5%, new vehicles rise by 0.8%, shelter rise by 0.7%, medical services rise by 0.8%, and transport services rise by 0.5%, all over the last month alone. Now, these are all actually quite bad figures as well. They are as high, if not higher, than we've seen in previous months, and this directly contradicts that idea that's been pushed over the last month that inflation is over, it's no longer an issue, the Federal Reserve doesn't need to keep hiking interest rates because it's back on its way down to 2%, which again, that's what the market was hoping, but it just isn't true. We did actually get some good news from this CPI data report though. What is it? Well, energy on the whole was down by 5% over the last month. That was driven, of course, mostly by a drop in gasoline prices, which fell by 10% over the last month, and fuel oil, which also fell by 10%. Now, don't get me wrong, this is good news, absolutely, but it's not quite as good as it might seem. Year-over-year inflation for gasoline is still above 25%, so prices are still today far, far higher than they were a year ago. They are just lower than they were a month ago. The reason for this is quite simple as well. Biden has actually been pulling quite heavily from the strategic oil reserve in the US to bring prices down in a run up to the midterms to try and help the Democrats perform well. Surely, though, I hear you say you can't be complaining about this, can you, Max? Well, at some point, Biden is going to have to stop pulling from these reserves and actually do the opposite and start buying oil to put them back into these reserves, because the purposes of these oil reserves isn't supposed to be to keep gas prices low. It's supposed to be to fund and supply the US military. In fact, Biden is already reportedly considering buying oil back at $80 a barrel to refill the reserves, and this will simply just cause gas prices to rise back up to where they used to be. Another problem with this supposed good news surrounding energy prices is that yes, gas prices are down over the last month, but other forms of energy prices are continuing to rise. Electricity prices are up by 1.5% over the last month, and natural gas or piped gas is up by 3.5% over the last month, and this isn't good for businesses or people alone. Basically, this data report showed us a brilliant headline figure on the CPI index of 0.1% inflation month over month, but behind the scenes, the state of inflation is still god awful. Year over year inflation is still 8.3%, and most goods and services are still getting very expensive every single month. This is basically the polar opposite of what markets wanted to see. What does this actually mean, though, and why are investors so unhappy about all of this? Well, of course, it's to do with the Federal Reserve and the impending recession. Now, I use the word impending there for good reason. There's just no way around it anymore, and no one can really deny it. I have been saying this for about a year now, saying that we are heading on into a recession, but now everyone else agrees as well. The fact that inflation is not over, the prices of everything except gasoline are still rising month by month, means that the Federal Reserve has very simply not done its job in fighting inflation, and it must not only continue with what it's been doing, but actually go harder and stronger. We've already seen interest rates hike harder than ever before in American history, with two 75 basis point rate hikes in a row, but even that isn't enough anymore. We are going to see higher and more interest rate hikes than anyone thought we would a month ago, and that means one thing for the economy: a crushing recession. It means that owning a home will get more expensive. Owning a car will get more expensive. Your credit card debt, that will get more expensive. It will get more expensive to go to school. For businesses that want to grow or invest in themselves, that will get more expensive. Literally everything will be harder to fund and more expensive to run, and this is by design. This will slow the economy down. It will reduce buying pressure, and it will cause inflation to fall eventually. If the Federal Reserve doesn't pursue this policy of aggressive, harsh rate hikes that make every American poorer today, then inflation will plain and simple continue to grow and grow, and we will eventually see the total evaporation of the value of the US dollar. This is like being stuck in between a rock and a hard place, except a more accurate way of putting it would be like being stuck between the worst recession of our lifetimes and the total collapse of the American financial system. Yes, the recession will be hard and millions will suffer, but it will be so much worse if nothing is done at all. Now, the specifics of what we're actually looking at really aren't too precise at this point because it's still relatively early days. Gundlach, a famous investor, wants rate hikes to be brought down to 25 basis points to avoid a recession because all he cares about is his asset prices and his hedge fund, while Treasury Secretary Summers wants them to go up to 100 basis points or a full 1% rate hike to finally treat inflation with the reverence it deserves. Despite the fact that these people who claimed that inflation was never a problem 2 years ago and that it wouldn't become a problem today, they've been wrong at every single possibility, they are still holding true to their guns and still claiming that inflation isn't a threat. These people, though, are wrong. The Fed itself is unfortunately still a little bit torn, and it's still occupied by the same spineless cowards who put their own desires before the needs of their country over the last 2 years, and I find it very hard to believe that suddenly they're good people and they're going to make the right decisions this time. The Federal Reserve, the people on the committee, people like Jerome Powell and Janet Yellen, they are the very reason the US is in this place in the first place, so I always try to be a little bit careful when I state that I think they will do what's right in the future. They refuse to do what was right for years in the past, despite knowing full well the consequences of their actions, so the evidence stands directly against them. As of right now, the markets are now split between pricing a rate hike of either 75 basis points or 100 basis points in the next session. My bet is of a full 1% rate hike. My hope, though, is that we see something even higher, as right now the credibility of the Fed has never been so weak, and this would help to restore faith at least a little bit into that mindlessly corrupt institution. Ultimately, this is what the market is now predicting. It's what we call a hard landing. It's the process of bringing inflation down, but unfortunately causing a recession in the process. Investors had been hoping for the entirety of the last year. No, they'd actually been praying that a soft landing would come. They'd been claiming that we live in la la land and we're all rich and happy and money printing doesn't cause inflation and the Fed can then bring inflation down without causing a recession. But that idea is now 100% dead. It's gone. It's not happening. The recession is already here. It's going to get worse. The reason the markets tanked so deeply over the course of one day is very simple. Millions of investors all realized this at once and they sold their positions. They realized the markets are going to continue to go down, probably for about another year or so at the least, so they took their money and they ran. There will be no Federal Reserve pivot. I've been saying this for months now, and the rest of the investing world has finally caught up. Yes, it will suck. Yes, it will be incredibly difficult, but no, this isn't the end of the world. What can we actually do here then? By being sensible and responsible, we can all make it through a recession. There are some very simple ideas here that you should try to live by, like being responsible, not buying a brand new truck for $80,000 on finance that you can't afford. That's all you really need to do to make it through the recession. Work hard, keep your job, make the repayments on your house, cut back on luxuries, and learn to be a bit of a spendthrift. Continue investing what you can into the markets because they will go back up eventually. Just be the responsible person you know you ought to be, and all will most likely be well. I do think it's also worth mentioning that things really aren't looking much better across the rest of the world, to be honest. In the UK, we just got new inflation data too, and while it was slightly better than expected, the situation is still totally and utterly dire. Like the US, we saw a small dip in headline CPI figures to 9.9%, down from 10.1%, but on the surface, this has also just been dragged down by falling petrol costs. Food, shelter, goods, and services are still rising at record paces, pulling cash away from the consumer. Interest rate hikes are still coming too, albeit far slower than they are in the US. Take a look at any EU country and it's the same story, any country in the West and it's the same story. This is a problem felt all the world over, and the solution, I'm afraid, is the same all over as well. Crash the economy, cause a recession, destroy inflation, and then move forward, but you cannot ignore inflation.